9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man. We're cutting down the open of markets in Greater China. Our top stories this morning. Asian stocks under pressure after sluggish U.S. jobs numbers did little to boost bets on whether the Fed can continue to cut further next year. And Chinese shares also nearing a correction on renewed economic worries. But some funds remain bullish, with China potentially shedding its uninvestable tag for good. Also ahead, another major chipmaker debuts in Shanghai. We're talking MetaX, set to start trading after a wildly oversubscribed IPO. An exclusive with the CEO of Hong Kong's largest licensed crypto exchange, HashKey, as it makes its trading debut this hour. All right, it is hump day, of course, taking a look at markets, and we're still kind of digesting this November jobs report coming out of the U.S. here. It didn't do too much in terms of moving the needle where the Fed and how many cuts they can have for next year. Traders are still pricing in at least two for next year. So certainly that didn't really change the discussion too much here, given that it was a mixed report. But right now we are seeing a slight rebound in some of these risk assets here this morning after what has been a pretty decent two-day sell-off across Asia stocks here. So the Kospi is recovering a bit. We're up about a third of 1%. Taiwan's coming online and catching a slight bit here. And the Nikkei is doing a different thing, and we're pretty flat right now. So we're wavering a little bit here, given that we are getting closer to the end of the year and not much catalyst out there here. But certainly one to watch is, of course, what we saw on the FX side of things. The dollar continues to be weighed down by that U.S. job support. We saw Treasury yields heading lower as well, but that steeper sort of trade continued on here. If you look at the twos and the tens, twos and the 30s, the fives and the 30s as well. So that continues on. Dollar yen still on the stronger side of things. We're still below that 155 level here. It's good to watch what oil does as well, because we're basically talking about oil that continues to have a slump here. We're holding around to those losses after we did see Brent fall to around $59 here. Shanghai crude is following on the face of that here, but it is really what we've been seeing here. This concerns about a supply glut. Also, when it comes to IEA saying that it could be one of the largest gluts we've seen since the pandemic. But then again, we are seeing some rising geopolitical tensions when it comes to Venezuela as well. So that's why we did see WTI perk up just a bit. How long that lasts could be something that we're watching very closely, but that's why Brent is slightly higher, coming off some of the lows that we've seen in the last few sessions or so. Gold is catching a bit still. Copper is still continuing on after reaching those record highs on Friday as well. In terms of the China setup, right? So we didn't quite hit the correction territory when it came to HSCEI, when it came to MSCI China yesterday. HS Tech, though, we're still on bear market watch for that one as well. Futures are pretty flat across the board here when it comes to China this morning. Yields are ticking slightly lower by 1 basis point for your Chinese 10-year yield. But yeah, look at that strength in the renminbi. We're at 703 handles. I believe that's another fresh 2025 high for the currency as well. So despite this recent pullback, we still got to talk about the year that China stocks had, right? We're still talking about outperformance here, right? They're really outperforming their global peers this year as the market sheds its uninvestable tag. You see from this chart, basically, we have overcome, or at least surpassed, some of the performance that we've seen when it comes to the all-country index, when it comes to the U.S., even when it comes to Japan. We've narrowed the gaps when it comes to outperformance in Korea and Taiwan, for example, as well. But certainly a lot of questions of whether that uninvestable tag is forever gone, right? Let's bring in our team to talk about this as well. Our Bloomberg's Asia FX and Rates reporter Tian Chen. Also with us is Winnie Wu, head of APAC Equity Strategy and co-head of China Equity Research of BofA Global Research. Tian, I'll start with you. So, can we say that this uninvestable tag in China is gone for good?
Well, that's a good question. I think right now, at least for the short amount of time, people don't think China is uninvestable anymore. But actually, to be honest, when I'm in my conversations with my contacts, I think there's a pretty subtle shift in the sentiment. So before, like 2 months ago, 3 months ago, in the summer, people were super optimistic about China because they were so underpositioned in China and the valuation was so low. But after a few months, right now they've entered the point that the positioning was is kind of balanced for global investors, kind of neutral, still a little bit underbalanced, but it's much better compared with a few months ago. And right now the economy is not very good, so we're not seeing a lot of data supporting the rally to go on. So there's a disconnect between the economy and the market, and more and more people are noticing the disconnection, and they're saying that for the rally to sustain into next year, they really need to see the economy to really recover, to see better activity data, to see better earnings. So for stocks, it's really dependent on the economy. But for other parts of the market, like for the yuan, it's a PBOC story. Whether PBOC wants the yuan, you just mentioned that, it's entered a new strong kind of point this year. But it's all about whether the PBOC will want to keep the yuan rallying, because on the good side, it's going to help, maybe consumption and internationalization of the currency. But still, China's economy is very dependent on exports, so the PBOC has to be really cautious.
Yeah, Winnie, you've talked about stocks for China this year being the great turnaround.
Yeah.
What surprised you the most of this year?
I think on the surprise side, apparently the technology breakthrough is a big surprise, right? Nobody was expecting the narrative today, which is, well, China might be even better positioned than U.S. in certain aspects of AI. Yeah. Consider, the electricity supply, consider the cost of all the talent and hardware. That's totally unimaginable before DeepSeek, right? I think the second surprise was how China evolved and rise out of the trade war. Right, a year ago, when we look at Trump winning the election, potential escalation of trade tension, everyone perceived China to be the biggest loser and worry about China being potentially cut off from the global trade system, financial system, which might make China stocks uninvestable. But, after this year, China actually proved its leverage, and China proved that it's very well prepared. So I think that fear of China being cut off is also largely declined. So I would say those, the long-term innovation capability is for the upside, right? If China has a growth future, whether China can continue to deliver, whether it's 3%, 4%, 5% GDP growth, I think now investors have much more confidence that continued productivity gain will be driving China's long-term growth on the upside. And in terms of the geopolitical side, it's protecting the downside, right? That there's much less fear of China being cut off from the world.
We're still looking for positive surprises for next year, given that, as Tian mentioned, the market is getting a little bit more concerned about the macro side of things. What could be that positive surprise?
Yeah. Currently, I think investors' confidence on those two items I mentioned are already very high. Investors' confidence on policymakers and liquidity supporting the stock market is also relatively high. So it's kind of hard to see much more positive surprise on this front. But I would say fundamental side, market actually doesn't have very high expectation in terms of the turnaround in job market, in income expectations, in consumption. So fundamentally, the biggest positive surprise I'm hoping for is that technology breakthrough can lead to new user scenario and high-paying jobs, right? Because even now, everyone says AI is replacing jobs, but, mobile internet was able to create a lot of jobs, and those were high-paying jobs for young people. So I think for the consumption to fundamentally turn around, for the property market to fundamentally stabilize, we probably need a better job and income outlook for the younger generation. Otherwise, pure monetary easing can do very little. I mean, look at Japan for the past 30 years, right? So I think, technology breakthrough leading to high-paying jobs, that would be a real positive surprise. Yeah. Other than that, if we can see more decisive, more forceful policy in terms of addressing the overcapacity issue, really take out the excess supply and capacity, that's probably going to be a policy measure that market will welcome.
Yeah, Tian, there is that whole issue, not issue, but something that has been surprised was that the people that have been participating in this equity market, and maybe this could contribute to the household wealth sort of story. Do they expect, the people that you talk to, that this rebound in Chinese markets can actually feed into the economy in some way?
I actually completely agree with what Winnie said. I think the problem right now is not loose liquidity, but is lack of demand. So the now very good news, based on what my conversation with contacts, is that they don't expect a wealth effect to be that significant, because a lot of investors, their money is still, a lot of households, their money is still locked in the property market, which is in a downturn. Very little of the money is in the stock market. So even though the stock market is doing well, their extra money they're earning from the stock market may be enough for an extra nice meal, but it's not going to be for like extra huge spending. So that's the problem. But at the end of the day, a better market is going to be not bad for the economy. It's going to be positive in the sense that it's going to lead to better sentiment in the market, and more companies will seek IPOs. We did see Hong Kong's IPO market being the best, among the best in the world this year, and if overseas investors are buying a lot of China's offshore dollar and euro bonds, that's going to be supportive for the financing costs for Chinese companies selling debt overseas. So this is more on the investment side that's going to support, and on the sentiment side that's going to support the economy rather than the wealth effect.
Yeah. You can tell us a bit more about what could drive it. I mean, it seems like valuation story is kind of this year. What about earnings? Is that going to be the key driver of what is going to come next year?
We certainly hope so, because valuation-wise, not only China is at like 78th percentile of the past 20 years of valuation range, which is already on the higher side. For Asia Pacific, it's even higher. Actually, for most other markets like Japan, Taiwan, India, it's 80 to 90 percentile, right? So valuation is getting a bit stretched, not only for China, but even more so for other Asian markets, especially Northeast Asian market. What we are really hoping to see is earnings turnaround. But on that, to your earlier question about the wealth effect, right? I think, Chinese household, the asset allocation to stock market is much lower than in the U.S. But even in the U.S., where, stock market equities account for much bigger asset allocation, we are seeing the K-shaped consumption. Right? So for China, even we hoping on the wealth effect from equity market, what we might see is K-shaped, that it will benefit a small group of wealthier, better off household that participate actively in the stock market, whereas the mass market consumption remain depressed because of the, even U.S. now have the youth unemployment issue, right? There are similar challenges in today's AI age for both U.S. and China. So I think fundamentally, betting on pure stock market recovery to driving broad consumption is a long shot.
Okay. Winnie, hold that thought. We'll have more from Winnie Wu there. Our thanks to, of course, Tian Chen, our Bloomberg Asia FX and rates reporter. Winnie, of course, from BofA is staying with us here. We're going down to the open of trade in Shanghai, Shenzhen, and Hong Kong on this Wednesday morning. Futures have been flat pretty much. So we're looking to see maybe not much really in terms of conviction here across this market. Continue to be flat here this morning. This is the China Show. Good morning. Your agenda here today, we're still on correction watch when it comes to MSCI China. You can add that to 8 shares, bear market, watch here when it comes to HS Tech here today. So watching some key levels on 3 of those gauges as well. We talk about that yuan strength, of course. HashKey, we talk about that. MetaX, these are the big ones here. MetaX could be the bigger one, just given the oversubscription we've seen, particularly when it comes to this chip maker as well. China Wanko, we're still waiting for that meeting, of course, on Thursday. And we're still waiting for some data in terms of FDI out of China. But let's stay on the MetaX story here and that debut here today. It's closely watched by investors after, of course, the stellar gains of its peer. Remember, more threads and what we saw there, triple-digit gains when they debuted. Let's get to our China correspondent, Min Lo. She's with us here. In terms of what we saw in the oversubscription, I mean, it's even bigger than what we saw with more threads.
Yes, 2,900 times oversubscribed, higher than what we saw with more threads. And already more threads on its debut, we saw it flip by as much as 500%. on day one at one point. So definitely a lot of interest in many of these new chip startups in China, especially given the domestic substitution theme. This is a company that is founded by an ex-AMD employee. 3 of its founding team members are previously from AMD, and it really reminds me of Mothreads, which is founded by an ex-NVIDIA employee. So this is a company that designs and sells GPUs for graphic rendering, for AI inferencing, for general computing purposes as well. And the company has said that its latest generation chips are closing the gap with NVIDIA's H100. So that's really interesting. Of course, the short-term outlook here could be a bit uncertain given that the NVIDIA's H200 chips has already gotten approval from Trump administration to sell to China. But at this point, the Chinese government has not really given a clear guidance as to whether or not Chinese companies can buy them.
And we're expecting more listings of chip makers to come.
That's right, because the Chinese government has obviously been trying to support the strategic sector. So they've been loosening the rules, allowing unprofitable companies to list on the star market. So this is a company, MetaX, one of those, like Mothreads, both are loss-making, and they are taking advantage of this new channel to list. So we are expecting more companies, including Changxin Memory Technologies, Yangtze Memory Technologies. These are potential ones that could list in Shanghai. And of course, there has been a lot of interest for these mainland Chinese IPOs because they have been seeing an average pop of about 250% on day one of trading. Wow. And that's partly because the authorities have been putting a lid on the amount of issuances onshore.
Yep. Okay. So there's that. There's also HashKey, which of course you spoke to, the chairman and CEO. We'll bring you that interview in just a few moments as well. That was our China correspondent, Min Min Lo. On that, we're still with Winnie Wu, head of APAC Equity Strategy and co-head of China Equity Research of BofA Global Research. It seems like there's still a lot of demand for some of these chip makers in China. When we were talking about when it comes to this AI trade, it was, shift away from the hard hyperscaler, shift away from the hardware, maybe go into energy. Where are we now in this whole AI discussion in China?
Yeah. I mean, for overseas investors looking into China AI, the first stop easily is the ADRs, right? It's the big e-commerce internet platforms and some of the data centers. And then we see it broadening out to infrastructure, right? To the hardwares, to the supply chains, power supply companies, PCBs, CCLs. And now, I think after November, we see increasing interest about China for China localization story, because people start to realize when you own American AI chip company versus owning Korea and Taiwanese company is like the same trade, right? Because it's all very correlated. Whereas buying China domestic AI chip company, memory company, equipment company might have a bit diversification, right? Because it's still in the broader AI theme, but they have different drivers. They are servicing the China localization, import substitution story, and there might be more potential room for positive surprise in terms of continued technology development. So I do think there is increased interest in these new IPOs, especially if they are in the niche areas where traditionally they are dominated by foreign players, right? So whether it's the AI accelerator or memory companies, I think there's certainly increasing interest among global investors. Although some of the concern hold back is still
valuation, right?
Valuation and the different entity list.
Okay, so there's still that. It seems like in the tech sector, right, you can still focus on some of those themes that you mentioned, but when I look at autos, when I look at food delivery, are those still going to be the weaker sectors that we're looking at within the tech cohort?
Yeah, autos, I think the outlook, the fear is that we'll see continued deceleration, right? Given the high base in the past few years of very rapid growth, already very high penetration, and even the trading subsidy, the marginal benefit is going to decline, right? You just bought a car this year. Are you going to buy another one next year? I think on food delivery side, there's a lot of debate. The earning visibility is just very low, right? Many investors hoped that third quarter this year would be the bottom, that the price war will stop. But I think after the result, people get a bit less sure, right? Yeah. Because if the fundamental supply-demand imbalance hasn't been addressed, if people's consumption power, purchasing power remains to be weak, then how do you turn that around, right? So I think that's partly leading into the challenge for next year of lack of earning visibility. Because this year for MSCI China earnings downgrade, right? Consensus was forecasting 8-9% year-on-year growth at the beginning of 2025, and it's down to negative 2-3% now. And the big downgrade is mainly from the e-commerce food delivery sector. So next year, are we expecting turnaround? Is it getting worse? Because at least the first half this year was still relatively high base. We simply don't know yet, right? So next year, I think the challenge for China market, lack of earning visibility remains to be a big one.
And what really has been driving the Hong Kong performance was southbound flows. That seems to be drying up of late. Why do you think that is?
So we'll see. There is potentially a seasonality factor. So when I was marketing in Shanghai in early November, some of the insurance asset management already said, well, we've had a great year, and it's probably time to lock in some gains. Don't want to make the base too high for next year, right? So there might be the year-end profit-taking factor. But on top of that, a couple of weeks ago, Chinese regulation about relaxing insurers' stock holding, the capital requirement for insurers' stock holding, the stocks that qualify for the relaxation are all supposed to be the A-share index constituent. So H-share, high-yield stocks or H-share tech stocks technically doesn't qualify. So there's a fear that insurers might be incentivized to hold more A-share rather than H-share. Finally, there's some market chatter about the incentive scheme for the onshore mutual fund manager. If you underperform the benchmark by 10% for 3 consecutive years, there might be a clawback in your bonuses. So the incentive is for onshore mutual fund manager to be staying closer to their benchmark. And H-share is not in their benchmark.
I want to get your outlook on APAC as well. I mean, given that the winners have been North Asia, I think India's kind of been the laggard here. What are the bearing and bull cases now for next year?
Next year, if U.S. market continue to be driven by AI, then I think, and it's a continued bull market, which is kind of the base case expectation now, then the base case is sort of a continuation of this year's trend that, North Asia, Korea, Japan, China, Taiwan, with the AI story that's supplying to whether it's the NVIDIA or Google or Apple, might continue to show better growth, whereas India might be perceived as a relatively loser in the AI development. But having said that, in the alternative case scenario, what if AI growth is having some setback, right? The potential short-term pullback along the S-curve, then India and ASEAN market might be the better hiding places for less downside and relatively less impacted, less crowded position.
Winnie, have a great rest of the 2025. See you next year. Winnie Wu there, head of APAC Equity Strategy and co-head of China Equity Research of BofA Global Research. Your renminbi fix just crossing your Bloomberg here, slightly on the weaker side at 705 against the dollar here today. Pre-market is flat. We'll have more coming up. This is Bloomberg. All right. One stock really to watch here today. Look at MetaX. 568% upside on the first day of school here. We talked about how it was so oversubscribed and more oversubscribed than what more threads its rival did just a few weeks ago. So certainly it is a stellar debut for the chipmaker here today on China, and certainly focusing on whether this is going to really spearhead another rally when it comes to the tech stocks here and maybe create a bit more excitement around some of these new listings here. So certainly there's some fund managers saying MetaX might actually have 10 to 12 times upside potential. We got the open coming up next. This is Bloomberg. All right, looking at live pictures now from the Hong Kong Exchange. A big listing debut here today. We're talking about HashKey. This is, of course, the operator of Hong Kong's largest licensed cryptocurrency exchange. They raised about $206 million in this IPO here and did offer those shares towards the higher end of the market range here. What we're seeing in the shares is not doing a whole lot here this morning, but certainly it is a key sort of thing to watch here, given the IPO market in Hong Kong continues to be hot, and this is just another reason why we're seeing that. And December has been busy, which we've been talking to our ECM team about here as well. So this is what we're seeing here right now as we count down to that gong ceremony here. They did sell about 240 million shares in this Hong Kong IPO, 668 each here as well. So there you go. Let's listen in.
祝贺 HashKey Holdings 在香港交易所成功上市。来，我们先看上市仪式来拍几张照片。
There you go. Shares up marginally higher here, about 0.6%, but certainly this IPO performance is going to be a key test for Hong Kong as well, whether this push to become a regional hub for digital assets can actually come true. So HashKey, very much a part of that story in some ways. One of the earliest crypto exchanges to be licensed here in the city after, of course, they unveiled that dedicated digital asset regime back in 2022. So there you go. Shares up about 1% here. But yeah, we got to talk about something else, right? That's happening in Shanghai, because that might be overshadowing what's going on with HashKey today. Yes, we're talking about MetaX integrated circuits, Shanghai. Explosive sort of IPO here, first day of listing in the Shanghai market here. We're talking about, this is the China Chipmaker. You may remember More Threads that debuted just a few weeks ago, earlier this month. Yeah, we saw a pretty similar sort of first day as well, where it was up triple digits like what we're seeing with MetaX as well. And this IPO and this listing in particular was even more oversubscribed than More Threads, right? So we were talking nearly 3,000 times oversubscribed on the retail portion. So this is, of course, the maker of graphics processing units for AI developers. Of course, this is a big, big industry that's growing at a very rapid pace here right now as, of course, consumers and businesses adopt AI services. So is this going to be the catalyst here for a rally in tech stocks once again? But yes, I'm saying that could be bringing some more upside, of course, to this market. All right, we'll talk a little bit more about MetaX in just a bit here. We're going to take a look at the rest of the opens here in terms of your mainland markets. And we are still seeing slight green arrows here this morning, recovering from the sell-off that we saw. We didn't quite hit the correction territory, mind you, for HSCEI or MSCI China. But right now we're seeing if we get to that today. Looks like today we're pretty steady. We'll see how the rest of the day goes. But you are seeing some of these large caps like Quaychow, CATL, slightly to the downside here today. Not much really catalyst here. We're still tracking Shanghai crude, just given the move that we saw in oil overnight, given the oversupply concerns here this morning. Copper's not doing a whole lot here after reaching record highs that we saw in the LME contract on Friday. But here's Hong Kong. This might be more important, but you take a look at what we've been seeing so far. Xinhua had a good line about the eco picture here. They're still expecting 5% growth for this year for China, which is no surprise. I think most economists we talk to say we are likely going to hit that target. Next year seems to be more of that question mark. But we're seeing marginal declines here. So a little bit better than yesterday, but we're still seeing tech a little bit under pressure here today. And it is the likes of Alibaba, Baidu, Tencent, and Meituan that are slightly to the downside. Xiaomi is doing a little bit better. But mind you, dollar China continues to be a strong one. 703 levels here right now. That is one of the stronger prints that we've seen for this year. And there was another weak fix from the PBOC. So the central bank is trying to at least maybe slow down some of these gains that we've seen of late. All right, let's get to, of course, another listing that we just talked about. HashKey says it is not considering expanding into the U.S. market just yet, but is not ruling out the possibility once Washington introduces regulations for crypto financing. Speaking exclusively with Bloomberg, the chairman and CEO, Xiao Feng, discussed the timing of the listing amid a slide in crypto prices.
We don't know how crypto prices may fluctuate next month, so we didn't give it too much consideration to short-term market sentiment. It's been 7 years since we established HashKey in Hong Kong in 2018. We feel it's the right time for an IPO. Second, and more importantly, we expect the US to fully establish the core legal framework for crypto finance in the first quarter of next year. We see that as an opportunity for market development. We want to be fully prepared before that, and an IPO is part of our preparation.
Does it mean that you are in the process of obtaining approvals and license to operate in the US, and what is your progress on that front?
We don't have any specific plans to enter the US market yet, but we view it as a huge future opportunity. So we're closely monitoring innovations and developments in US and SEC regulations. We're also very pleased to see that in the past month or two, the SEC and the CFTC have introduced many new regulatory rules around crypto assets and finance. They have clarified many areas, making the rules for the market increasingly clear. So we look forward to the day we can enter the US market.
What is your outlook on the regulatory space in mainland China? Do you think at some point it could match Hong Kong's regulations?
We see that mainland China is investing significant resources to promote the development of the central bank's digital RMB. By doing so, China acknowledges blockchain technology and the tokenization of currency. In fact, there's mutual recognition of some infrastructure from the perspective of underlying basic technology. The current restrictions in China, I believe, are not aimed at cryptocurrencies or digital assets. China has adhered to capital and foreign exchange controls for decades. If the capital is converted into a token, such as a stablecoin, it will impact controls from the mainland. So rules on capital controls need to be set first before allowing the cross-border flow of funds.
Your company is still making losses as of first half of this year. I believe it's about 500 million Hong Kong dollars in losses. What is your path to profitability?
We have a longer-term plan. Currently, I think profitability is not the core indicator for our business operations because the market is developing rapidly, and we still have plenty of work to do, which requires massive investment. However, we pay more attention to our cash flows, which determine whether a company can operate sustainably.
How long will this round of IPO financing sustain your cash flow?
Before this, we had a cash reserve of nearly 2.2 billion Hong Kong dollars on our balance sheet. Based on the cash flow generated by our monthly operations, if the 2.2 billion Hong Kong dollars serves as a supplement to our operating cash flow, it can sustain our future operations for 40 months, which is over 3 years, assuming we don't expand our investments. The IPO will increase our cash flow by more than 2 billion Hong Kong dollars. So together, I believe we can not only achieve a longer period of sustainable operations, but also increase our investments over the next 2 years, a period when the market could develop very quickly.
And that was the HashKey Group Chairman and CEO Xiao Feng speaking with Bloomberg's Min Lo. And as we've been talking about, right, it's been a banner year when it comes to share sales in Asia. And you take a look at how the league tables are kind of faring. Morgan Stanley has now pulled ahead there. And despite competition from other Wall Street giants and Chinese banks, for more, let's bring in our Bloomberg Asia Equity Capital Markets reporter Dave Sebastian and tell us really, now, who's on top before we talk about Morgan Stanley, but, what's been driving that?
Yeah, so it's been a really fierce year of competition for banks, and out of that, we have Morgan Stanley at the top, with nearly $28 billion worth of deals in equity and CBs and EBs as well. And that's a nearly $9 billion lead ahead of Goldman. And apart from that, we've also got JP Morgan and Citic Securities and UBS in the top 5. And really what's common among these banks is that they've been working on some of the biggest deals in the region, if not the world, such as CATL's $5.3 billion listing, as well as Zhejiang Gold's $3 billion plus listing back in September. So, these banks have been getting a good chunk of the slice this year.
Yeah, and 2 years in a row for Morgan Stanley. It's interesting, right? When we talk about the different dynamics in this market, where during the COVID era, there was a lot of Chinese banks that were taking up a little bit of the pie.
Yes.
And yet still, we're seeing a lot of U.S. banks remain on top for this year, right? So how did this year go, you think, among the banks?
So interestingly, for them, for the first quarter, it was quite slow for them because there were 2 big deals, that of BYD and Xiaomi, more than $5 billion each, that they missed out on. But they sort of climbed back up somewhere like in the summer, where they started picking up big Seoul deals where they're getting Seoul mandates, including a big CB in Ping An Insurance, as well as a big block trade, somewhere in July. And so, that really propelled them to the top. And they also picked up some, deals in healthcare as well. And that eventually led them to where they are right now with nearly 10% market share.
Yeah. Early slow start, but then it catched up in the end. We talked about the big, massive pipeline for Hong Kong, but what really is next that we need to watch out for?
So for banks, at least, the competition will be still fierce going into next year, especially for these banks, they would have to contend with competition with Chinese banks as well, especially here in Hong Kong for listings.
Imagine how fees are.
Exactly, and like they're low. So we did a story last week about listing fees, and they're touching lows, in nearly a quarter century, it seems, at least. And, there's a competition. And on the pipeline side, there's some 300 companies in the pipeline, according to the exchange. But how many of those or how well they do next year, that really depends on the market. So we'll see how it goes.
All right, Dave, great stuff. Asia Equity Capital Markets reporter Dave Sebastian there on how these league tables are shaping up as we wrap up the year here. But yes, MetaX, that one certainly is a domestic listing. And this is the one, of course, is a big one here. Once again, 560% upside on the first day, 691 yuan per share here for MetaX. Coming up, we'll look at why. Well, we've been talking about that dam in China. It stirred up controversy and could even strain relations with India. We have more from our Bloomberg originals. Coming up next, this is Bloomberg. Welcome back to the China Show. Here are some of the big corporate stories we're tracking for you today. Bloomberg has learned that Warner Brothers Discovery is planning to reject Paramount's hostile takeover bid due to concerns about financing and other terms. Sources say the company's board still views its existing agreement with Netflix as offering greater value. Warner Brothers earlier agreed to sell its studios, streaming business, and HBO to Netflix for about $83 billion, including debt. Waymo is said to be in discussions to raise more than $15 billion at a valuation near $100 billion in a financing round led by its parent company, Alphabet. The company has achieved an annual revenue run rate above $350 million. The robo-taxi maker is the front runner in a race against Tesla and others to turn autonomous ride-hailing into a business. And Bloomberg has learned that China's Luckin Coffee is mulling a bid for Nestlé's Blue Bottle coffee to boost its brand profile and expand in the premium coffee segment. Sources say Luckin is also evaluating other acquisition targets, including the operator of Percentage Arabica coffee stores in China. Founded in 2017, Luckin has expanded with thousands of stores offering low-cost coffee, surpassing Starbucks in store numbers in China. And China Wanke has unveiled a revised bond extension proposal for creditors to vote on as it makes another attempt to gain support for a plan to avoid default. The company is offering to pay 60 million yuan in interest due on December 15th by the end of Monday and is proposing to extend its grace period to 30 trading days. Wanke is scheduled to hold a bondholder meeting on Thursday to discuss the latest proposal. Now, China is currently building one of the world's largest hydroelectric dam in one of the most earthquake-prone regions on the planet. The dam in Tibet is set to cost $167 billion and could take at least a decade to finish. But it comes with a set of challenges. Bloomberg's originals took a look, and here's a preview.
From the glacial melt here, the Yarlung Sangpo River flows over 1,000 kilometers east along the edge of the Tibetan Plateau, before performing what many consider a geological miracle at a location known as the Great Bend, right where the plateau meets the Himalayas.
雅夏水电工程体量大、周期长、影响远。
It's at the Great Bend in Medog County, Tibet, where construction of the Yasha, or Lower Yarlung hydropower project, officially began in July 2025. It's a place so remote, a road only reached it in 2013.
The energy generation from this project will break records in many different dimensions. It will be by far the world's largest individual source of energy, 60 gigawatt of installed capacity.
The Chinese government has said that this will generate about 300 billion kilowatt hours a year. That's more than the UK uses an entire year. It's also about 3 times more than the Three Gorges generates.
Unlike a traditional walled dam, observers believe this one would be made up of a series of hydropower stations along the river. Theories vary, but some outside experts suggest there would be one upstream dam with a large reservoir to regulate the water flow. This would be followed by a second smaller dam at the top of the gorge, where water would be diverted from the Great Bend through the mountains via a number of underground tunnels and turbines, before potentially entering another smaller re-regulation dam at the bottom of the gorge. This could stabilize the flow before the river continues downstream into India.
And subscribers can watch the full documentary on the terminal and also on Bloomberg.com. All right, checking markets here right now. We are seeing a bit of a turn here to the positive side of things when it comes to the CSI 300 and the Hang Seng. We are now 0.5% up onshore, 25,280 for your Hang Seng here. And HS Tech seems to be patching a bit here as well. Obviously, when it comes to a lot of anticipation, all excitement around MetaX, there you go. 560% gains there here today. Maybe that's giving a little bit more upbeat excitement here over tech and the like here today. The rest of the markets are doing this here. We are still seeing a slight rebound when it comes to the region after what has been a few days of selling. And you are seeing, at least when it comes to the Nikkei, Kospi, and Taiwan are now in positive territory, with Taipei up about 0.6%. Australia, though, is heading the opposite direction here today. Now, if you are a subscriber and we want to rewatch our reports or interviews, and you can watch it through, of course, our interactive TV function, TV Go. Also become part of the conversation and send us instant messages. Check it out at TV Go. Well, Citadel founder and CEO Ken Griffin says Republican policies on tariffs and immigration are currently driving inflation. Speaking with Bloomberg in Paris, he thinks in the long run, their push for deregulation will ultimately stem those pressures.
The big picture is the American consumer is tired of the persistent and sticky inflation. They feel like they can't get ahead in a world where their savings and their wages are constantly deprecated by the impact of inflation.
Why aren't Republicans speaking to that? Is it an issue of not having the policies, of not communicating the policies correctly?
So I think it's actually fairly complicated. I think that the Republicans struggle with the reality that many of their policies, which they ran on, for example, ending illegal immigration into the United States, are actually pro-inflationary, right? When you end illegal immigration, you reduce the size of the available workforce, that's pro-inflation. And so the Republicans are grappling with tariffs, another case study. You impose a tariff, it's a regressive tax on consumers. It's pro-inflation. So some of the very policies that the Republicans have put forth and have been successful in implementing are actually the very policies that tend to be pro-inflation. Some of the other policies, for example, deregulation, are just going to take longer to play out. And ultimately, deregulation, which should unleash productivity gains, will create a reduction in inflation, a very healthy reduction. But we need to get to that point in time.
And that was Ken Griffin there, Citadel founder and CEO, speaking with her colleague Danny Berger in Paris. All right, some other stories that we're tracking for you today. President Trump's push to loosen China's influence in the Panama Canal has reportedly hit a snag, with Beijing upping its demands in a deal to sell dozens of ports. The Wall Street Journal says China will block the ports deal with a BlackRock-led group unless Chinese shipping company COSCO gets a majority stake. BlackRock and his partner were open to offering COSCO an equal stake, but the new demands are said to be unacceptable. The Trump administration is threatening to retaliate against the EU over efforts to tax American tech companies. The Office of the U.S. Trade Representative said in a social media post that it would use every tool at its disposal to counter the EU's measures. The department singled out prominent European companies, including Accenture, Siemens, and Spotify, as possible targets. All right, checking markets here right now and possible movers here. Well, let's take a look at what comes Apple suppliers, right? It's mostly higher here. There's been this report from The Information about how the iPhone line might be expanded. So with at least 7 new models expected by late 2027. So some of these suppliers are gaining on those news, on this possible major expansion, which would release, of course, this first foldable iPhone that could be coming out in fall 2026, according to The Information. So that's one sector that we're watching very closely, although AEC Tech is heading the opposite direction. We're also watching some of these battery stocks as well. And we talked about the news from Ford yesterday, entering into the battery energy storage system business. According to UBS, some of these Chinese battery manufacturers may face the risk of losing market share in the U.S. We're not quite seeing that negative reaction in some of these stocks. In fact, Ganfeng Lithium is up some 4% here today. Treasury wine is an interesting story. They were just talking about when it comes to the China slowdown, and that's really been weighing on overall their earnings. The shares basically sank to the lowest in more than a decade. We're down more than 8.5% after announcing an overhaul, which including asset sales and cost cuts here. But really, they've been talking about the CEO, the company experiencing category weakness in the U.S. and in China, and it will impact their business performance in the near term. So that certainly is something that has been obviously, a big sort of question mark for the maker of Penfolds, right, the producer, where the shares were falling as much as 17%. We've come off that a little bit, but they also canceled that $133 million stock buyback and said to be reviewing its planned capital investments. So certainly a lot of uncertainty when it comes to that company and when it comes to the outlook for China as well. So there you go. Rest of the markets are doing this, right? So apart from the MetaX story, which is going nuts, right, 552% gains in the Shanghai market, it is at least helping to keep onshore markets afloat, whereas the Hang Seng is still losing a bit of momentum here today. Keep in mind, we are still on correction watch when it comes to the HSCEI as well as MSCI China. HS Tech is now flipped back into negative territory here. So there is a bit of consolidation that's being taken place here today in the Hong Kong market as well. HashKey is not doing a whole lot, slightly up when we were just checking when it just came online here. CGBs are doing this here. We're seeing yields actually lower here by 1 basis points in the 10-year. So there is a bid for bonds this morning, and Shanghai crude is lower down about 2%. We'll have a lot more coming up in the next hour. Belle's going to be joining me here to walk us through some of the key themes here. We're going to have Mahjabeen, Zaman from ANZ to talk us FX and the like. You're watching The China Show. Welcome back to The China Show. Here's a look at the CSI 300 a half hour into the session. We're coming off some of the initial highs, but we're still seeing slight gains to the upside here, about 1/3 of 1%. At least we've avoided what we've been talking about, MSCI China. What we've been talking about, H-shares is really correction territory. We haven't quite hit that just yet. We escaped that a little bit yesterday at the close. We'll see if we continue here today, but really it has been fluctuating between gains and losses when it comes to the Hong Kong market side of things here. But of course, MetaX, that is at least keeping Shanghai afloat here this morning, given the substantial outperformance. We're talking about 500 plus gains on the first day of school. I want to bring in our co-anchor for this hour, Annabelle Jewelers. She joins us from Sydney here. This MetaX story has been remarkable, Belle.
Yeah, it's an incredible one. And I have to say this morning at 9:30 a.m. or even prior to that, I was already sitting at my computer anxiously awaiting this trading debut. But I think when you took a look at just the oversubscription on the retail portion, it was pretty clear that we were going to see a very strong jump at the open. We got that about a surge of 570%. There's a lot of parallels that I think are really interesting to draw as well between MetaX and more threads. And we can get on that in just a moment. But let's also take a look at what's happening in the bigger Asian complex today as well, because that's certainly also a story that's reflecting the US jobs figures that we got overnight. Signs of sluggishness, I think that maybe at a headline level, it looked like it was, some mild deterioration, but still some cause for concern, I guess, under the hood when you really considered those figures. Not enough, though, to really change the base case around Fed easing for next year, which is still looking, at least from the trader perspective, for 2 further reductions in the key rates. So Asian equities, I mean, you're seeing them looking pretty flat there today, but some of the other things we're tracking, of course, course, is what's happening in the oil market, because we saw crude tracking back down to a 5-year low. We have, though, seen a slight move higher this morning, around 1% or so for the benchmark. So that was after President Trump said he was ordering a blockade of sanctioned oil tankers going into and leaving Venezuela. So certainly ratcheting up the pressure on Caracas with that U.S. military build-up in the region, the threat of land strikes as well. We've just had a response, though, from the Venezuela VP saying that Trump is looking to steal resources with threats, and also, again, responding to Trump wanting to seize Venezuelan oil. So that's some of the lines we just got there from Venezuela's VP in a statement posted to Telegram. But as we said, that story very much around MetaX today and the trading activity we're seeing so far for that company. So it's a company that, again, is making GPUs, similar to more threads, but GPUs for AI chips. And you can see that surge really continuing to hold half an hour into the session.
Yeah, let's bring in our China correspondent, Min Lo, to join in on this, right? We talked about the retail interest was quite massive. Tell us a bit more about the company.
Yeah, it's a very interesting company. It's founded by an ex-AMD employee, and it really does seem to be the playbook for many of these Chinese startups these days, that they work in a big international company. So for this particular company, MetaX, the CEO worked for 14 years at AMD. 5 years ago, he left to focus on his own startup, and he has been hiring aggressively a crop of top-tier talents. One of his first hires was the CTO, who also was one of the first Chinese female scientists for AMD as well. So very similar to More Threads, which is also started by an ex-NVIDIA employee. And we saw the retail portion of the IPO oversubscribed by nearly 3,000 times, and really eye-popping sort of gains that we saw at the trading debut today. It really makes me question as well what happens in the underwriting process. You know, how do they value a company that is still unprofitable at this point?
Yeah, it's interesting too, Belle. I mean, we talk about, China's really trying to create these national champions and these sort of alternatives to NVIDIA, Belle. How does really MetaX stack up among some of the national names that you've been covering?
Yeah, so I think MetaX is a name that's actually being consistently highlighted to me by investors. I know people are very bullish on this company and the prospects for it, but as Min said there, it still is one that's loss-making, even though it's actually projecting a faster path to break even than you see from More Threads. But in terms of how much of the market it's capturing right now, I think it's looking at around 1% of China's chip needs. So it really is just a minnow. But at the same time, the technology that it's pursuing is certainly very targeted, because unlike More Threads, that's sort of focused on consumer gaming GPUs and fully functional GPUs, MetaX is really pursuing high performance AI training and data center workloads. So they've got chips that are very much specialized for this purpose. So again, I think that just speaks to why there is so much interest in this stock, particularly when you had the reporting early this week or last week from us at Bloomberg, that scoop that China's looking at directing as much as $70 billion into the ecosystem to more fully build it out and focus on that self-reliancy.
Yeah, and a key question is whether, of course, China is approving or at least allowing these Chinese companies to buy up NVIDIA H200 chips, right, which President Trump gave the green light to just a few weeks ago as well. How is that going to all fare, you think, for MetaX?
Yeah, of course, it will have short-term impact on the company, because if Chinese companies get the green light to buy from NVIDIA, then they will not need as much of these domestic homemade chips. But I think longer term, the theme of domestic substitution is going to stay, right? Because I think sources have been saying that the Chinese government's thinking, even if they were to allow people to buy the H200 chips, they see that as just a temporary solution to buy time for local chip makers to catch up with foreign technology. Because one of the big bottlenecks right now that people are telling us in the industry is that Chinese chips are able to do inferencing work, but they still can't do training work, which requires, ingesting large amounts of data and then finding the connection between them. So that's where companies like MetaX are still far from catching up with the likes of NVIDIA. The company did say that their latest chips are close to catching up with NVIDIA's H100 chips, but that is, the second latest generation that NVIDIA has is one generation away from the latest Blackwell chips.
Yeah, Belle, talk a little bit more about that, right? There's so much AI euphoria. You're seeing that very, today with MetaX, but does it in some way mask some of the long-term technological challenges that China AI still faces right now in terms of the manufacturing side?
Yeah, well, manufacturing's been one of the key bottlenecks, and you've got two main foundries. There's SMIC, there's Huawei, but it's only SMIC that can produce those advanced nodes, and that is the big challenge, I guess, or one of the key bottlenecks is just getting that manufacturing capability. I do think it's interesting, though, because we've heard from a range of different chip designers, the likes of Cambricon, for instance, Huawei, that are all talking about scaling up their production capabilities next year or having greater production output. So exactly how SMIC and Huawei plan to handle that, I think, is going to be really interesting to track. But yeah, in terms of where MetaX sits in this, I mean, yes, they're catching up to Min-Min's point. The H100, again, it's from that Honeywell series. So you've got the Blackwell right now. You're going into Rubin architecture next year for NVIDIA. So clearly a bit of a ways behind still. But we have seen chip makers as well really kind of getting quite creative with the way that they look at their chip making technology. For instance, Huawei as a company has pursued supercomputing clusters, for instance, that, yes, might have a higher energy need, but still can get high compute power as well to try and compete with what you get from the US.
And Min-Min, we're not quite done, right? I mean, we're talking about there's still a flurry of companies in the AI space that are looking to list for next year. What are we tracking so far for next year?
So we have companies like Yangtze Memory Technology, Changxin Memory Technologies. These are two that could be seeking an IPO potentially next year on the STAR market as well. And it really points to the success of the Chinese government policy so far because they have loosened the listing rule to allow unprofitable companies to list on the STAR market. And that's why more threads and MetaX are able to list. And as Belle mentioned, the high electricity need for companies like Huawei as well. Many provinces are now providing subsidies, lowering electricity costs to support the build out of data centers in China. So yes, many industry watchers are saying that this policy from the Chinese government really is supporting the sector, and that's why we are seeing so much interest on an index like the Chinex, right? Yeah. There's been a lot of concern around AI valuation being or overexpended sort of capex spending among the top tier companies, but many people are now looking at some of the second tier companies that are listed on the Chinex or the STAR market.
Belle, next year's going to be quite busy for you too, I'm guessing. Tell us more. What's on your radar in terms of some of these AI plays next year?
Yeah, well, exactly to Min-Min's point. I mean, you've got a host of different listings that we're looking at in the China chip space. I think also one that we really should mention as well, and one that I've already just been in touch with even as late as today, is Baidu, because there are reports that they're looking at listing off their Kunlun Xin division, which is the maker of the Kunlun chip. So this is, again, chips that are being used to power data centers. This is a company or business unit that's been valued at as much as $3 billion. So just another name we're going to be tracking very closely next year.
All right. Our thanks to, of course, Min-Min, our China correspondent on the latest when it comes to MetaX here this morning. Here's a look at how Asian markets are doing as we go to this break here right now. And we say it's a pretty quiet day, but at least we're seeing positive gains here when it comes to onshore markets. CSI 300 is up about 0.1%. Hang Seng is flat. Nikkei and Kospi, though, slightly higher. This is Bloomberg.
We expected ongoing softness in the labor market, but it isn't creating a pullback in the broad economy.
Yes, inflation is high and it's persistent, but it has been coming down.
If you look at the unemployment rate, it's true that the unemployment rate did tick up. That uptick, though, is statistically insignificant. And if you dig into the numbers and look at what caused it to go up, it's entirely driven by re-entry into the labor force.
Corporate earnings have been really the star here.
Retail sales control group number was pretty strong.
Let the doves have their day, but Thursdays, I think, will belong to the hawks.
You were just listening there to what some of our guests have had to say about the jobs numbers from the US that came in overnight. But recapping some of those figures, because, again, as we've been saying, there was sluggishness at the top line level, but also quite choppy. So you saw payrolls, for instance, gains there of 64,000 in November. That was after a decline, of course, that we saw. You can see that drop there, that big red bar of more than 100,000 in October. The unemployment rate as well ticking up to 4.6%. So continuing its upward upward climb. So it just seems like more and more out-of-work Americans are struggling to land new jobs, and that's sort of the bigger picture that we can take away from this. Doesn't perhaps change any expectations around where the Fed goes next year, though. But let's bring in Mahjabeen Zaman, head of FX research at ANZ. And Mahjabeen, how did you digest the figures, and what did they tell you as well about the state of the US economy?
Yeah, look, I think very mixed picture on the jobs data and noisy, as you said. Look, government jobs continue to be under pressure. I mean, we knew the deferred resignations post-DOGE changes were coming into play. Private payrolls is a key indicator. Now, that's been soft for quite some time and deteriorating. So again, broadly, we do see a noisy but weaker job market out there. And then, of course, when we think about what the Fed is going to do or what the market expectations for Fed cuts are, largely, still pointing to the dovish side of things. Now, we are continuing to expect 2 more rate cuts next year from the Fed. And I think that's also supported by the fact that we had the average hourly earnings down. We had employment costs income ratio, which is the broadest measure of wages, also lower. So, from the supply side of inflation, I think that's coming off quite a bit as well. And so I think that kind of plays into our view of 2 more cuts ahead.
This is coming against a time when I guess the rest of the world seems to be at least signaling the end of their easing cycles, Mahjabeen. Should I assume then the dollar can weaken substantially, much more for towards 2026? I mean, how much more weakness could we still see in the dollar?
Yeah, look, I think we do continue to expect, and broadly, into next year, a gradual decline in the dollar at a much lower speed or slower speed than we saw last year. And I think there will be a push and pull from the domestic side of things in the U.S. as well as the international side. Of course, on the domestic front, we've got Fed cuts, questions around Fed credibility, what happens with Lisa Cook, we'll find out, and we're waiting to see. And also, then one of the largest drivers of dollar weakness, at least this year, was U.S. policy uncertainty. And of course, with the midterms around the corner towards the end of next year, that will come into play on the domestic front. Now, on the other side of the equation, of course, it's what's happening internationally, right? And I think couple of things in mind. As you said, yes, market expectations for whether it's in New Zealand or Canada, hikes are starting to get priced in. And so that will kind of be supportive on those crosses. One point I also wanted to mention was the AI boom. Of course, U.S. equity markets generally looking pretty good. But I think the question that we've been getting is that, is this a return of U.S. exceptionalism? And will this be a return of the U.S. dollar strength that we saw over the past decade in terms of strength? And we think, I think the AI boom, depending on how it proceeds from here, it's a bit tricky to make a call today. But I do think that if there is more room for this to grow, it will not just benefit the U.S., it will be a global growth story because there are other economies that are part of this AI story, which will be supportive as well. So it's not going to be just a U.S. alone story here.
Okay, the BOJ, I mean, that's going to be the big one this week on Friday. It looks like largely expect they're going to hike. You're saying that you don't expect any sort of further yen strength from here. Why not?
Yeah, look, first of all, it's already priced in. That's one point. The other thing is that what we have seen in recent BOJ meetings, they have generally disappointed on guidance in terms of coming up with further hawkishness. They've always been a little bit more cautious, to speak to the tune of data dependence, and also maybe just indicating a fairly shallow hiking cycle ahead. I mean, we are expecting another hike next year. But, even at 1% terminal rate for the Bank of Japan, we don't think that's very restrictive. And I don't think that transmission for the yen is going to be significant in terms of strength.
Okay, so we're talking about JGBs, where basically, when you're talking about this melt up that we've seen leading up to this, right? I mean, it's been a while since we've seen a 30-year JGB yield yielding some 3% or so. In terms of the repatriation sort of concerns, people are saying this could some way, do an unwind of the carry trade. You don't think that scenario is likely? I mean, is there any sort of risk to the carry trade around the yen now?
Look, I think, the yen will continue to remain a funding currency. Carry in FX really is front and center, especially when we see a little bit of divergence amongst interest rates. Now, if the Bank of Japan continues to hike up to 1% into next year, we are also seeing other economies looking at potentially consider hiking, not in 26, in 27. So the carry trade is very much in play as long as FX walls remain low. And at the same point of time, to your point, JGB yields, have moved higher. But again, they do not fully reflect what the fiscal situation in Japan is. Of course, with the current fiscal agenda, which is only looking at a bigger debt, a wider debt situation in Japan, actually Japanese yields should be much higher. And in fact, they're still, in my mind, pretty low as compared to where they should be. And I think a large part of that is because Bank of Japan holds a large portion of those.
Two more central banks are watching closely. There's ECB, BOE. What are you expecting from these?
Look, I think for the ECB, broadly expecting a hold there. But I think, one thing we need to look at closely will be the revised forecast from the ECB. Now, if the revised growth forecasts are not adjusted high enough, or if Lagarde comes out to push back on, potential future rate hikes and come across a little bit more dovish. Of course, that will have implications on the euro. Also, we've got the European Council meeting coming up as well. It'll be interesting to see how the European leaders get together and reach a decision on various items, whether it's Ukraine, EU budget, defense spending, and maybe that will give us a sense of how the fiscal agenda, which, again, was rolled out earlier this year, how that moves into implementation into the next year as well. With the Bank of England, I think broadly markets expecting a hike as we are, a cut as we are.
Talking about central bank divergence, I think what's also interesting in Australia is that you're seeing a big split on the RBA path ahead and not too much consensus on whether we get a hike in February. But what's your expectation on that?
Yeah, look, we continue to expect the RBA to remain on an extended hold at 3.6%. We do think that the expectations have moved a little bit too aggressively to price in rate hikes. I think we need to wait for more data. Inflation data will be coming out early next year. That will give us a bit of a sense on where Australia stands on the CPI front. But also labor market is a key indicator. Now, so far, the most recent RBA meeting statement was a little bit less hawkish than markets might have been expecting. It looks like the board is keeping their options open. And they also noted that, labor market conditions are expected to ease modestly, which kind of, again, points to a bit of a less hawkish than expected outcome there from the most recent meeting.
Mahjabeen, thanks so much for joining us this morning. That's Mahjabeen Zaman, their head of FX research at ANZ. And coming up, we've got details on Singapore Bank's bet, that's UOB's bet on China's real estate backfiring as the region's property sector outlook continues to deteriorate. We'll get the details on that just ahead. This is Bloomberg. We've got a breaking line crossing the terminal here. OpenAI is in talks to raise at least $10 billion from Amazon. This is reporting according to the information just out in the last few moments. But essentially, these talks apparently are ongoing. According to that publication, a valuation of OpenAI at higher than $500 billion. Now, if this sort of investment were to proceed, the information is saying that it would help OpenAI afford its commitment to rent service from cloud providers. That includes AWS, of course, and it also could lead to OpenAI using Amazon's type of ASIC chip that it's manufacturing as well. So could it be something that involves commerce partnership opportunities? But again, that reporting there from the information, Yvonne.
Yeah, I mean, that valuation of $500 billion is amazing. Upfront comes OpenAI. We'll bring you the latest one to get a bit more, of course, on that story. In the meantime, we're taking a look at when it comes to what's happening here in Hong Kong and China, which is the property market. And one of Singapore's top banks, UOB, its bet on the city and China's real estate sector is backfiring and is now facing mounting troubles due to the region's worsening property market. Let's bring in our Bloomberg credit reporter, Kari Sue Lindberg, who joins us now to tell us a bit more about the pressures that we're seeing for UOB. How exposed are they?
I would say they're significantly exposed because they were what you might call one of the most aggressive in terms of deciding to finance all these land deals, both in Hong Kong and China. And they made this bet, so to speak, before kind of the property crash, that began in 2022, and then has like since spiraled down. And so I would say the reality is why this matters now is because, if I can say, the rooster's now laying its eggs essentially, right? And payday is coming due. So a couple weeks ago, when they did their earnings, they announced that they'll have a provision of 615 million Singaporean dollars. And so what does that mean? That means that's the potential amount for bad loans that they may have to write off on their books as a result of this bet, because most of those loans are coming from deals that were made in this very city.
Wow. So what sort of impact will you likely see, right? These woes that we're seeing in their exposure to China property, how is that going to really hit the bank longer term?
Yeah, I think I think that is still kind of the ongoing saga that's a real question mark. And that so much will depend on if their bet is paying off, right? Because they're making a bet right now that by rolling over and refinancing all these loans, they can ride the kind of property market cycle, so to speak, and hope that the valuations go up again. But that will really be, to be determined, essentially.
All right, Kari, thank you for bringing that story for us. Kari Sue Lindbergh there, our credit reporter on UOB. Val, you've been checking markets here, in particular when it comes to silver, once again, hitting records.
Yeah, absolutely. It really seems like we're just getting that continued rally in metals into year end. But yes, silver has been hitting a fresh record high. And so we are seeing strong demand for precious metals across the board. And you're seeing some of these China-linked silver stocks that are surging so far. What else is surging or has been surging this morning is SBI Shinsei Bank over in Tokyo. So we're talking about the debut for MetaX, but certainly we're seeing other trading debuts, and this is one of those that we've got today. 322 billion yen raised. It's the second biggest IPO we've seen in Japan this year, so giving the lender a market value of 1.3 trillion yen. And lastly, I think this is an interesting one to watch, and maybe one that I wasn't expecting as we came into the session today, but Korean hair loss therapy stocks are absolutely surging, and this is after the president, Lee, remarked about the possibility of health insurance coverage for such treatment. So he's saying hair loss used to be seen as a cosmetic issue. These days it feels like more of a matter of survival. I'm not sure how maybe the men out there feel about this, but we are seeing certainly a market reaction off it. More ahead. This is Bloomberg.
11:29 a.m. in Tokyo. Japanese markets heading to that lunch break in just a moment. And yeah, we're seeing gains here when it comes to the Nikkei. We're up about 175 points here right now. So a recovery, slight one underway here. Of course, we're still watching the yen trade 154.90 levels. So still coming off some of the strength that we've seen, but still sub 155 as we count down, of course, to the BOJ. Seems like we've been talking and been counting down to the BOJ for weeks now, Belle. But yes, it's happening on Friday.
Finally, we're getting there to end the week. But yes, I mean, the stage it seems to be set for a hike. Let's take a look at what's happening in the broader markets today, because we're seeing stocks just kind of trading ground. But we had them weaker overnight in the US session, and US futures are still, again, fairly flat so far today. But the big story is certainly what we're seeing in terms of the reaction to the jobs market or jobs data that we got, because it showed a cooling jobs market, you could say, not one that's rapidly deteriorating, so that didn't really upset or unseat any sort of expectations around the Fed. We're still seeing 2 cuts priced in for 2026, but the odds of that happening early in the year being lowered down to around 20% for a cut in January. Otherwise, in the session today, I mean, you're seeing, again, not too many moves here, but watching that energy index in particular, given we did actually see oil tracking back down to a 5-year low. It has just risen a little bit in the session today, though, after we had President Trump again speaking about Venezuela. Listings to note as well, because big debuts in Hong Kong today. We've had HashKey, of course, that's one of the major crypto exchanges in the city, a little bit under pressure, but certainly, I mean, I think MetaX is capturing really all of the attention. But we came on about 560% to the upside. We've now gone to 700% gain. So to Min Min's point, was some money left on the table in that underwriting process? Possibly, but it also just speaks to the sort of mania and the hype that we see around China's chip industry as well. So let's get more on this now, bring in our senior Asia equities reporter, Abhishek Vishnu. And Abhishek, I mean, that's quite an exceptional trading debut there we're seeing.
Oh, absolutely. And, it points out to the formation of new China that we have been, covering over the last year and a half or so. It's a 600% jump. It's definitely impacting sentiment for other chip makers, other stocks tied to national champions, other stocks tied to themes of localization, substitution. But more so what it points towards when you look this gain in this chip maker in context of the other listings that have happened in Hong Kong with not so much gain or just almost flat, is that it shows that it's a two-pronged sort of approach when it comes to China investing. There would be one which is New China, focusing on innovation, right from chip makers to biotech and other such sectors, which will be getting a lot more love from investors. And then there would be old economy stocks tied to older problems like slowing consumption, the downturn in property market, that would remain a macro problem, thereby capping a little bit of upside at the index level, but it won't stop the slow and for sure formation of this new China that investors are buying into, which is very much focused on innovation.
Yeah, so where does it go, the headline? Yeah. Go ahead, Yvonne.
Go ahead. No, New China is very interesting, right? This is a big theme. But when you take a look at some of these benchmarks, we're still on sort of correction watch, right? When I look at Hong Kong, HS Tech is in bear market watch even. How are funds positioned right now? Are they still bullish?
They're very much bullish. I mean, we've just done a cross-asset story talking about, yuan stocks, both in mainland and Hong Kong, bonds, and the outlook that we've received from some of the managers which are actually managing trillions of dollars in assets, is pretty bullish for next year. And look at yuan's gain this year, first in a few years in context of the calls for more appreciation of yuan to de-risk the economy away from exports. So that checks out. In terms of China, we would debating about this uninvestable tag, but the market has changed. Market constituents which are leading these rallies have changed. We are looking at this chip maker which has jumped 500, 600 odd %. And therefore the outlook also remains pretty bullish for these stocks. I mean, valuations are sort of full, like we had a Bank of America strategist saying earlier, but there might be earnings upside coming in a different a whole gamut of stocks which will support the market. So there may not be as much of a gain as we have seen this year, but there would be on the stock side. And look, yes, some of the gaugers are looking at these technical milestones, like bear market or correction. But, these are things which have been made in context of how the markets have evolved over the last 100 years or so. And when everybody knows, certain things in market, they're pretty much discounted. We have to look this as a breather, as a short pause in this long-term uptrend that has started in China once they have proved their mettle in terms of policy making, in terms of innovation, in terms of this trade war, with the US. So net, what we are getting from fund managers as well as from sell side, as well as from data is positioning is just improving in all kind of Chinese assets.
Abhishek, thanks very much for joining us. That was our senior Asia equities reporter, Abhishek Vishnoi, there in Singapore. And as we said, HashKey also making its debut in Hong Kong today. So we have spoken with the exchange or the crypto exchange operator, and it says it's not considering expanding into the US market just yet, but it's not ruling out the possibility of that happening once Washington introduces regulations for crypto financing. Speaking exclusively with us, the chairman and CEO, Xiao Feng, discussed the timing of the trading debut, given we've seen that slide as well in crypto prices.
We don't know how crypto prices may fluctuate next month, so we didn't give it too much consideration to short-term market sentiment. It's been 7 years since we established HashKey in Hong Kong in 2018. We feel it's the right time for an IPO. Second, and more importantly, we expect the US to fully establish the core legal framework for crypto finance in the first quarter of next year. We see that as an opportunity for market development. We want to be fully prepared before that, and an IPO is part of our preparation.
Does it mean that you are in the process of obtaining approvals and license to operate in the US, and what is your progress on that front?
We don't have any specific plans to enter the US market yet, but we view it as a huge future opportunity. So we're closely monitoring innovations and developments in US and SEC regulations. We're also very pleased to see that in the past month or two, the SEC and the CFTC have introduced many new regulatory rules around crypto assets and finance. They have clarified many areas, making the rules for the market increasingly clear. So we look forward to the day we can enter the US market.
What is your outlook on the regulatory space in mainland China? Do you think at some point it could match Hong Kong's regulations?
We see that mainland China is investing significant resources to promote the development of the central bank's digital RMB. By doing so, China acknowledges blockchain technology and the tokenization of currency. In fact, there's mutual recognition of some infrastructure from the perspective of underlying basic technology. The current restrictions in China, I believe, are not aimed at cryptocurrencies or digital assets. China has adhered to capital and foreign exchange controls for decades. If the capital is converted into a token, such as a stablecoin, it will impact controls from the mainland. So rules on capital controls need to be set first before allowing the cross-border flow of funds.
Your company is still making losses as of first half of this year. I believe it's about 500 million Hong Kong dollars in losses. What is your path to profitability?
We have a longer-term plan. Currently, I think profitability is not the core indicator for our business operations because the market is developing rapidly, and we still have plenty of work to do, which requires massive investment. However, we pay more attention to our cash flows, which determine whether a company can operate sustainably.
How long will this round of IPO financing sustain your cash flow?
Before this, we had a cash reserve of nearly 2.2 billion Hong Kong dollars on our balance sheet. Based on the cash flow generated by our monthly operations, if the 2.2 billion Hong Kong dollars serves as a supplement to our operating cash flow, it can sustain our future operations for 40 months, which is over 3 years, assuming we don't expand our investments. The IPO will increase our cash flow by more than 2 billion Hong Kong dollars. So together, I believe we can not only achieve a longer period of sustainable operations, but also increase our investments over the next 2 years, a period when the market could develop very quickly.
And that was a HashKey Group Chairman and CEO Xiao Feng there speaking with Min Lo. And turning now to, of course, another Chinese company that we've been tracking, which is Luckin Coffee, which is said to be considering making a bid for the blue bottle coffee chain owned by Nestle. Now, sources say it's part of efforts to boost its brand profile. Let's bring in Manuel Balgori. He leads our Asia-Pacific deals coverage and joins us now with the scoop. This seems quite ambitious, but what do we know so far?
It is ambitious indeed, Yvonne. Another deal for potentially Luckin Coffee, right? They've been looking around. The company has been performing much better, and they now feel they're in a position to look for an expansion overseas. They want to bring their success from China into the rest of the world. They are looking into assets in Europe and into the US. Consumer retail is still an industry where Chinese companies can do acquisitions in other markets. And the potential target of Blue Bottle makes sense also because Nestle has been exploring a potential disposal of this asset. There are others in the market. We also mentioned in the story Arabica, which is also backed by PAG, a private equity firm, and there could be others as well. Coffee is a very hot space these days, interesting story behind Luckin Coffee.
It's really such an incredible turnaround when you consider it was delisted back in 2020. And I'd love to know more about really the key plays in this and exactly the steps that were taken. But what do we know about the capability of Luckin to finance this type of transaction and also the timeline and the pace of the deliberations as well?
Yes, Annabelle. Luckin Coffee has a private equity backer, Centurion. It's a Chinese private equity firm. They have a lot of expertise in backing and supporting growth for companies across different sectors. So they do have the capability and the firepower to potentially pursue acquisitions. I'm sure they will also look for other ways of funding, including potential debt financing from banks or other resources. So yes, and the company is also doing better financially speaking. They've been doing much better in China, and what they're trying to do is replicate that growth in other markets. Still early stages. They have different targets on the table being evaluated as we speak. Bear in mind that we also understand from our sources they've been looking at Costa Coffee in the UK, which is owned by Coca-Cola. Coca-Cola also trying to sell this asset. So as we discussed, a lot of movement in the coffee space globally. So it's definitely an industry to watch. But Luckin Coffee becoming a more prominent player. Definitely an interesting name for the coming quarters.
Yeah, the coffee market is hot, as you say, and something is brewing. I had to go there. Manuel Valgore, thank you so much with the latest on that scoop when it comes to Luckin Coffee. Speaking of things of Chinese companies making influence abroad, you got to take a look at these pictures, Belle, of Kim Kardashian and Snoop Dogg during a live TikTok shopping event that happened earlier this month. Now, the firm is working to replicate the shopping experience that you see in the Chinese version Douyin, right? And they've really been champions of that, this whole live streaming segment that you see in China. And now the U.S. is slowly looking to adopt this sort of strategy. And small businesses are really increasingly making TikTok Live a core sort of part of their sales strategy as well. And, it's not just Kim K, right? We talked about small businesses, but it's just so interesting, right? I mean, it was almost like a morning show. You add that to like an infomercial, which is very traditional in U.S. sort of TV, but it was kind of a sort of a fusion of the two. But it added a bit more of an element here because I guess of the celebrity factor, but certainly they're talking about how much sales they can really get from these sort of live streaming segments here. And the U.S. is really catching on now.
Yeah, to be honest, Yvonne, I mean, I came from a breakfast TV background, so infomercials were a key part of my early career, and I have to say, I feel worried about this. I feel worried about this transformation. I feel tired by it, and I'm really intrigued to understand how exactly TikTok's been able to make this catch on, given that you've had other companies like Amazon or YouTube or Facebook, Instagram try this in the past, but they haven't really been able to find that secret sauce. But of course, TikTok, I mean, it's just so integrated into the daily lives of millions of Americans. So we don't know how much TikTok's planning to make from this, but they are expecting, we have reported in the past, to generate $77 billion globally from TikTok Live by 2027. So we might not want to see it on our screens, but it seems like we are going to be seeing it more on our devices moving forward. But if you are a subscriber and you want to rewatch any of our segments, you can via our interactive TV function, TV Go. You can also become part of the conversation by sending us instant messages. So do check it out at TV Go. More ahead. This is Bloomberg. We're keeping an eye on central banks in Thailand and as well Indonesia later today. That's as they make their last rate decisions for the year. And it comes as both countries battle economic and political challenges. But let's get more on this from our team now. Joining us from Bangkok is our reporter, Papicha Tanakas and Pitpat. And covering Indonesia for us is our Southeast Asia economy reporter, Claire Zhao. So, Papicha, let's start with you. What are we exactly expecting? We've got this rate decision coming up later this afternoon.
Annabelle, this will be the last rate meeting for the year for Thailand, and the BOT is set to consider a flurry of factors going into that meeting, including a weaker growth outlook next year, the impact of the U.S. tariffs next year, as well as the baht that just notched a 4-year high this week. So we're looking at basically either the fifth cut in 14 months or a second consecutive hold. But most analysts expect that the BOT will cut 25 basis points to 1.25%, and this will follow a cut from last October, which interrupted an easing cycle that has already delivered 100 basis points in cut in the last 14 months. But it's also possible that the BOT will wait a little bit before it starts easing again, considering that we have an election coming up in February, and the BOT might want to preserve the limited policy space just to see where Thailand is heading politically first. And its next meeting will come at the end of February after the election.
Yeah, I mean, there's plenty that's weighing, right, on the economy, whether it's U.S. tariffs, flooding. There's also, of course, the political situation and that deadly border clash with Cambodia. So with an election coming up, how does that weigh on the economy, Papicha?
Yvonne, after PM Anutin dissolved parliament last week, the government is in a limited caretaker capacity, which means that the fiscal stimulus plans are being shelved until a new government is formed, and that could take 5 months from now. That is not really good short term for Thailand, which is a country that has seen bouts of political turmoil and 3 short-lived administrations since its last election in 2023. And this heightened political uncertainty is adding on top of that recent political turmoil that was already weighing on growth, which is now projected at just about 2%, which is less than half the pace of neighboring countries. And of course, all of this is eroding investor confidence, with foreign investors having sold more than $3 billion worth of Thai assets this year, and that has sent the benchmark set index down 10% this year, and it's now the worst performing bourse in Asia.
Okay, so Claire, we'll bring you in then, because, we might get that cut from Thailand. Bank Indonesia, on balance, a pause, but it's still going to be a close call.
That's right. Bank Indonesia is expected to hold for a third straight meeting today, but it could be a close call because of the flurry of economic factors that the nation is also facing. However, if we do follow the signals of Governor Perry Warjio, the short-term focus of the central bank will be the rupiah, and that will be its main priority when it focuses on the decision today. The problem now is a lot of foreign investors are heading out the door, worried about slowing economic growth, weak job creation, weak consumption, pretty fundamental issues in the economy. And then you also have this issue of potentially a much bigger budget deficit. You have foreign investors selling off government bonds. Indonesia could possibly see a net outflow for the full year of 2025. That'll be the first net outflow in 3 years. So that'll be weighing on the central bank today. That being said, it wouldn't be the first time that the central bank has surprised us this year. In fact, half of its decisions have been surprises. One economic consideration will be that huge Sumatra flood that hit the country late last month. We're expecting that could hit agricultural output. It's left more than 1,000 people dead and destroyed scores of infrastructure. And the economy could use a little boost from another rate cut.
All right. Claire, thank you. Our thanks to Claire Zhao there, Southeast Asia economy reporter, also Papicha Tanakas and Pipa joining us out of Bangkok as we talk about these 2 policy decisions in Southeast Asia. Before we go, let's take a look when it comes to Asian markets and how things are going here right now. It's slow going, but at least you're seeing the CSI 300 doing a little bit better now. We're up 0.6%. Singapore is heading in the opposite direction. Kospi as well doing a little bit better given just the 2 days of sell-off that we've seen of some of the tech sort of plays here today. We are seeing, of course, the big trading debut in Shanghai is certainly helping things. MetaX seems to be fueling a lot of positive vibes in Shanghai. This is Bloomberg.
Well, we've just got a few days left of 2025, but we're seeing a new billionaire class emerging in China as we round out the year. And this is as we start to see this pick up in Chinese chip companies that are choosing to list in the mainland market, also deliberations around Hong Kong as well. But today, the name that we're focusing in on is MetaX. And this is yet another GPU manufacturer or designer that is based in China and made its listing or trading debut today. So you can see a very significant surge there. The founder's net worth has now climbed to $5.4 billion. So it's incredible figures. And especially, as I said, this new billionaire class is not just MetaX. Last week we had more Threads, for instance. And again, that's another billionaire that's been minted, Chairman Zhang. His net worth climbing to $4.3 billion as well, Yvonne.
Yeah, it's a great story on the Bloomberg here from our Bloomberg Rich Go sort of team when they talk about how it's a familiar playbook. What you see with more threads, what you see with MetaX is that you learn from an industry giant like AMD, which is where the MetaX CEO Chen Wei-liang came from after being there for more than a decade. You strike out alone, and then you push through these fraught kind of U.S.-China geopolitics to come on top here, as you say, minting him as a billionaire. And I don't know if you've seen that Taylor Swift documentary about how she awards all her dancers. They kind of have a similar sort of arrangement here with some of how they retain the talent there in this pre-IPO partnership. So I think even just owning a little bit of a stake in this stock is minting some millionaires within their team here. That's it for us here in the China Show. We have Insight with Haslin and Amin next. Stay with us.